So in this video, we're going to talk about two proven and very powerful methods through which you can avoid the false breakouts while you're working on technical analysis for your trading. Hey guys, welcome back. So today in this video, we're going to talk about how you can avoid the false breakouts. The first thing that we need to understand is basically what are false breakouts if you're not already familiar with them. You must have, if you have been trading for some time, you must have heard about the false breakout, or you must have seen the false breakouts. But let me just show you how they look like. Okay, so let me just go down here to the charts, and if I zoom in and let me just hide these drawings. So here we can see that the trend is going bearish. Okay, and when we see that there's a bearish trend going on, and after some time or at some point we can see the candles going upwards, which means that now the trend is starting to go bullish. So sometimes what we think is now the trend has reversed, the trend has successfully reversed, and it's gonna keep going in the bullish direction. But what happens is after some time, instead of going bullish, it starts continue going bearish. Okay, so that's where the false breakout is, because it didn't reverse, it instead continued its direction after giving a false breakout. So we can see that here the trend is going bearish, and we can see the market going bullish for some time, and then it continued its bearish direction. Okay, so that's what the false breakout looks like. So now let's look at what are those two methods through which you can avoid the false breakouts. The first one among them is trade with the higher time frame trend. Okay, let me show you how you can trade with the higher time frame trend. Okay, if we go here to our charts, we can see that the overall trend in the market is bearish. From here we can see that there is formation of this high, and then there is formation of this low. Then we can see the continuous formation of these lower highs and lower lows, which means that overall trend in the market is bearish. So if we see a breakout happening in the bullish direction, we should be concerned about that, because the overall trend in the market right now is bearish. Okay, and we can also go towards the daily time frame in order to confirm. So here we can see that we're at 13th of September. So if we go towards the daily time frame and look at the candles here at daily time frame, we should be able to see, let me just hide these drawings, so we should just be able to confirm that what is going on. So here we can see that we are at 13th of September here, and here also we can see that the overall trend in the market is bearish. So now what we're seeing at lower time frame, because at higher time frame we are seeing that there's a bearish trend prevailing. Okay, here's the 13th of September. So when we go towards the lower time frame, we are seeing that there's a trend, a breakout happening in the bullish direction, which is not true, because it is going to be a false breakout, because the overall trend in the market is bearish. Okay, so here we can see at this point that there's a level forming here, and we can see the breakout happening, kind of breakout happening here. Okay, but this breakout is against the higher time frame trend, because this breakout is in the bullish direction. However, our higher time frame trend is in the bearish direction. So this is our first signal that this is going to be a false breakout. So you should always trade with the higher time frame trend. Okay, now let's talk about the second method that we have in order to avoid the false breakout. So the second method that we have is we should always look out the breakout candlesticks. Okay, the candlesticks that are breaking the level. So when we go here and we look at that, we can see that basically as this is the same area, and the overall trend in higher time frame is bearish. Okay, and we can confirm that this candle is breaking out this level. Okay, now as we can see here that the market was bullish from here to here. Okay, now the breakout must happen in the bearish direction, and when we look at that, when we look at this candle, this is a pretty big candle because it has pretty big body. So what we should look for is the candle that is breaking the level, some level should be big. And we should also, like for reference, we can compare it with the previous candles. We can look at previous 10-15 candles and see if the candle forming here that is breaking out is small body or big body. It shouldn't be anything like doji or hammer. It shouldn't be like that. It should be a big body candle. Okay, and we can confirm that this candlestick has a big body, and as we all know that the big body represents the momentum. So what we can see here is there's a lot of momentum of sellers coming in. Okay, that's why the trend got reversed from this bullish to bearish. And also another thing supporting this bearish breakout is the overall trend in the market right now is bearish. Okay, so if we go here, we can see that the overall trend in the market is also bearish, and this breakout is also happening in the bearish direction, and candle that is breaking out this level is also very big. So these are two things that you should always keep in mind whenever you are doing your technical analysis, so that you can avoid the false breakout which can lead you to some loss. Okay, so that's why you should always be prepared to detect the false breakout and to avoid them. So I hope you like this video. If you have any questions, please comment down below. Also, please don't forget to visit our website www.forexb.co in order to learn more about forex and price action. You can also join our free Telegram channel where we continuously post educational stuff related to forex and price action. See you guys in the next video. Thank you.